Welcome again to another edition of the Fundraisers podcast. I'm delighted to be joined here today by Greg Savage. Those of you who don't know who Greg Savage is, you're probably not working in recruitment. But the reality is, if you are working in recruitment, you will know all about him. He is 40 years or more experience as a recruitment entrepreneur. He's built, he's sold, he's exited, he's IPO'd, he's invested in over 20 recruitment companies, and I think it will be absolutely delightful to have him here share with us a little bit about the entire recruitment industry as a whole, why we should invest in it, what is the opportunity, why people don't invest in it, and a whole load of other questions that we're going to ask. Greg, thank you for coming all the way from Sydney.
Yes, thank you, Ayaz. It's a pleasure to be here to talk recruitment. It's my favourite topic. Well, it's in the top 3 favourite topics.
Absolutely, yeah. So look, one of the questions I wanted to ask you, as you know, some of my audience and listeners will know this as well, that I'm a recruiter. I've been supplying talent to fund managers. Whenever I ask them this question, what do you do? What do you invest in? They will say a variation of this. I invest in real estate. We invest in infrastructure, we invest in energy, consumer, health tech, education, and the list goes on. But never have I heard, maybe only once or twice in the last 16 years, that our investment strategy is to invest also in recruitment companies. They might say HR tech, but they won't go as far traditional recruitment companies. So I want you to break this myth.
Right. Well, you're much more likely to lose your money investing in HR tech than you are in a good recruitment company. That is for sure. Because I get pitched an HR tech or recruitment tech solution every week. I have done for the last 15 years. I'm not kidding you. Almost always the enthusiastic founder will say within the first 10 minutes, we're going to be the Uber of recruitment.
Right.
To which I reply, you should aim higher. And they go, what do you mean? I say, well, Uber lost $3 billion last quarter and the CEO got fired for sexual harassment. You should aim a bit higher. So, but let's get into this. The thing about recruitment is it's not sexy, it's not top of mind, it's not traditional for investors to look at because they don't understand it. And it is high risk. But every investment is high risk, really. If you know it well, there are great opportunities. To think that there's no money to be made in recruitment is absolutely ludicrous. I mean, just off the top of my head, 4 quick examples, just to give you a flavour. The first business I started was in the 80s. 3 of us in a room. I invested $15,000 in that business. I borrowed it from my dad. I didn't have $15,000. 10 years later, we listed that business on the stock exchange at a value of $60 million. Let me hasten to say there were a lot of shareholders at that point.
And that was like 20, 30 years back, right?
Yeah. So that's a lot of money.
Back then.
A lot of money. That's just an example of what can happen. Hayes, I think they're the 10th biggest recruitment company in the world. I just checked this on my phone on the way walking in here today. They made £240 million last year. That's, what's that? Half a billion Singapore dollars. That's a listed company. Last week in Australia, a mid-sized IT recruiter called Finite IT, this is public knowledge, sold for 190 million Australian dollars.
All right.
That company was founded in about 15, 20 years ago. And I was having lunch with one of my clients, name will not be mentioned, who has just negotiated a transaction. Her business turns over 59 million. It made 9.5 million, and she sold it at 6.5 times multiple. That is $50 million.
How much did she put into it?
She owns 100% of it. She started it from scratch in the back office 12 years ago. So those are just, I've got hundreds of those. I can also tell you about businesses that have lost money. I mean, there is a listed company. It's on the Australian Stock Exchange, so I'm not betraying anybody. You can look at it yourself. Ignite, they've been trading on the stock exchange for years. They lose money. I have no idea how you lose money in this market. People who invested in that business probably didn't make a dollar. It's always a matter of timing. Some may have, but overall, exactly. No. But so we'll go into this later. For the right business, there are a hugely profitable business recruitment run well. But people tend to invest when those who invest in recruitment, historically, there are plenty of examples of people who've lost a lot of money investing in recruitment. We can talk about them later. But if you get it right, it's a tremendous opportunity.
So why is it then that people don't do it? What's that niggling reason where people just don't do it?
Well, first of all, it's perception. People think a lot of people, and a lot of recruiters will acknowledge this, a lot of recruiters suffer from imposter syndrome. They think they work in a Mickey Mouse industry that's not serious. Let me tell you something. In Australia, recruitment, the amount of money spent on recruitment agencies last year was $25 billion US. Now that's just a big number, it doesn't have any, let me give you some context. Yeah. That is more money that was spent by clients on the accounting profession and the legal profession combined. So the recruitment industry is twice as big as accounting services and legal services combined, right?
Wow.
So and basically, this is just going from the facts to the subjective. That money is created by doing a good thing, finding people jobs and helping companies grow. So first of all, there's that misunderstanding that it's a flaky small industry. It's not. It's worth $550 billion worldwide, US. Yeah. This is facts, right? And it's growing at 14% a year. It's bounced back out of COVID. So first of all, perception. It's not a serious industry. And yet those same people will invest in cryptocurrency. That makes me laugh my head off. So I'm not saying you can't make money in speculating, you can, but the majority of people lose money in speculating. The majority of people will make money out of recruitment if they invest in good recruitment businesses. And the other reason is a much more scientific one. I'll start with the unscientific. People who are skeptical about investing in recruitment will say, but your asset walks out of the building at 5 o'clock every night. What they're driving at is that it's all wrapped up in people, which is true. Whereas if you invest in real estate, you mentioned that earlier, I can go and feel my investment, look at it, walk around it. Whereas in recruitment, it's not so. So you are looking at certain factors that make a business sustainable, which means that there is excellent predictors of long-term profit. Now, of course, I can share with you what they are. And if you do that, and you invest in the right leadership, and a strategical investment with an exit that is clearly mapped out, then I of course have investments in BHP and on the stock market, but small things. But most of my accumulation of anything over my life has been in recruitment companies.
Got it. Right. So it's clear that it's just a myth, right? You could be running a restaurant and have the same issue where you're relying on customers coming in and out. They could just suddenly tomorrow decide they don't want to go.
Well, yeah.
But with recruitment, it's it's the same, and I get the point, and it's hugely valuable. Then there are a group of investors that will think like you and who will invest. How do you build that ecosystem? Where are they, right? How do you connect with those investors who do understand and think and talk like you?
Yeah. First of all, you got to, as a recruitment company owner, ask yourself why you need investment and why you'd have an outside investor. So I'm skeptical about that as a start, unless there's a good reason. But there are different groups of people who are investing in recruitment. There are individuals. For example, I forget the name of his company. His name is Khan. He's from the UK.
Oh, James Khan, yeah.
He invests in a wide. There are actually people like me. There's plenty of people. Well, there's not many people like me, I guess, but there's plenty of people who strategically invest in recruitment companies. There are private equity plays. I constantly get contacted. Sometimes my clients have been approached by private equity. Typically, they want to do a roll-up of 3 or 4 and create some leverage. There's that. And then, of course, an example might be you might be here in Singapore and you might find that a UK company, for example, Australian company, US company wants to get into Singapore, and they might invest in 15, 20% of your equity to give you funds to grow with a view to buying the rest over time. So there's plenty of those sorts of opportunities. So there's different groups who might be interested in investing. I had this conversation with somebody else yesterday. The question is, if you have cash flow to grow, why would you share the pie? If you think of it as a pie, it's only smart to share a piece of your pie if that extra sharing is going to make the pie 3 times bigger.
Right.
Because having 80% of a gigantic pie is better than having 100% of a tiny pie.
Sure.
So if it's strategic, yes. But otherwise, why would you do it? So let's think about it.
Is that because usually the entrepreneur is not thinking about growing a global big enterprise business, and most of them are more down the lifestyle route and so on, and that's why it just never takes off? If every recruiter and entrepreneur out there was thinking, I'm going to build the next Michael Page or whatever it's going to be,
I think
they might think differently.
Well, a couple of good question. A couple of things we think about there. Across the world, 80% of recruitment companies have less than 15 staff.
Yeah.
So they're lifestyle businesses, mostly because they started by recruiters who are good at recruiting but not great at managing and building a real business. I don't think it's building it to a Michael Page or a Hayes. Think of those examples I gave you of Finite IT, which was started by a woman whose name is Tracy Thompson. This is all in the public domain. She sold it for $190 million. My other client, which is private, she sold it for $50 million. She's got 26 staff. She sold it for $50 million. You don't have to build a gigantic business. You can build a good, solid, highly profitable business that is sustainable. I'll use that word again, and we'll come back to it. And that will do two things. It'll bring significant profits, which means you don't really need to sell it. You might just want to let somebody else run it and take the dividends, or you can sell it at a good multiple. You don't have to build the giant multinational company. I don't think Finite IT is anywhere else other than Australia. I might be wrong. Certainly my other clients, these are things that happened in the last week, right? I've got dozens of them.
Wow.
Yeah, I mean, all the time. I've been involved in like 5 myself. So, when I say involved, I either started those companies or a shareholder. I mean, an example that I can tell you a little bit about is Consult Recruitment in New Zealand. When I started working with them as an advisor, there were 4 people. And it was almost like the owner, Angela, she I wouldn't say she begged, that's completely wrong, but she said, look, give us a hand. And I advised, and then I took a shareholding. It's now 50 people. We sold it to Japanese interests 3 years ago. I'm now the chairman. I can't divulge the price, but let me tell you, there are plenty of people who don't need to work again as a result of that. Yeah. So that can happen, that took 8 years.
So your advice to entrepreneurs out there that are trying to raise capital because they want to do it big is that first think about, do you even need to make it big? And just come out with a really good strategy, right? Because you probably don't, it's not all about numbers, it's probably about how much revenue and profit you're making. And this brings me to the other question then. So what do investors look for when they're about to invest in a good, solid entrepreneur or a recruitment firm?
You know, Ayaz, that recruitment companies are typically valued on a multiple of historical profits, all right? So the company I'll make it easy for myself, made $5 million last year. And somebody might say, we'll pay you 5 times. It's many factors. That's not. I'm not giving you a price.
The range is what, 5 to 7, or can it go up to 10 as well? Or?
Well, okay. So the day we listed Recruitment Solutions, it was a 9 times multiple, and that night it was 10 times because the share price went up. If it's all permanent, it's unlikely to get even a 5 multiple. So there's a lot of factors, and let's answer that question about what. So I was going to say that a recruitment company is typically valued on a multiple of historical profits, but what a smart investor is buying is the certainty of future profits. And in that statement, which is a lot smarter than it sounds, you can see where the value is going to come. And that's going to be the difference between a 2 times multiple or a 10 times multiple, or something in between. So I'll give you some examples of what makes a business sustainable. First of all, it doesn't rely on the efforts of the owner or owners. So if the owner is totally integral to billing, holds all the client relationships, and manages all the consultants directly, it either will not be saleable or will have a reduced value because the owner is by definition leaving, even if it's after a couple of years. So what you look for is multiple revenue earners. If 5 of us were sitting in this room, let's say 6 of us were sitting in this room, Ayaz, we could each be really good recruiters and we could bill, I don't know, $600,000-700,000 a year. We'd have tiny overheads, we'd make $3 million profit. No one would buy it because you're buying 6 people. 3 resign, 1 gets pregnant, you've got nothing. It's not sustainable. There's no value in a database. That's nonsense. There's no value in a brand. Well, I shouldn't say that. There is some value, but the value is in the certainty of future profitability. So let me take another company which had 18 people in it, and they had 16 revenue earners, and they also had a temporary and contract book. And they also might be making the same amount of money, $3 million, but somebody might pay a 6 times multiple for that because have multiple revenue earners. So take my example. If 4 people resign, that's a big irritation business, not a disaster. Whereas if you've got 6 people and 4 people resign, you've got no business. Contract is annuity revenue. I know in some parts of Asia, it's not as big as in Australia or the UK. In other parts of Asia, like Japan, it's huge, contract, and it's growing in Singapore, but in certain markets. But contract means if you've got a permanent recruiter and he or she leaves, you pretty much switch off the tap on that revenue. But if you've got a contract recruiter who's got 60 contractors out and he or she leaves, you can pretty much retain that business. So annuity revenue, multiplicity of billers, a second tier of management. so that a buyer can look into the future and say, okay, the owners are going to phase out over 1, 2, or 3 years, but here comes the next generation, and the consultants are actually working for them, and so we can manage that. Good systems and processes. No client more than 10% of GP. You don't want, some people get a shock when they try to sell a business and they say, well, I've got this big client, and it's like 40% of gross profit. A buyer will say, well, we only have to lose that client because of a change of CEO in the US. We lost our business. So that will reduce the value, maybe make it unsaleable. So those are a few, there are more, but those are a few. Being in a sector that is perceived to be, so for example, IT versus, say, accounting. IT that's specializing in data and, say, AI, which people perceive as a growth sector. Yeah. So if you've got all the things I talked about and you're in that sector, whereas having all the things I talked about and you're in business support, you will get more for the sector where it's perceived it's more resilient to changing world.
Understand. Okay. So let's take the scenario where you have an entrepreneur and he's very good at what he does. He's got or she would be very keen to keep growing it, but realizes that actually it's a constant risk to keep playing with your own capital. So for example, you could be doing it for the last 5 years, 10 years with your own money, and in fact you might want to cash out a little bit. At what point would you advise an entrepreneur to consider taking capital from a third party to actually really go for it?
So I would, maybe it's my mindset, I could never see the reason. You mentioned the word cash out, and if I understood, I would
not
never,
completely.
Yeah, I would never sell part of my business for money, for me, because the value is for me to turn that into 10 times more. So I would take an investment if it was strategic. In other words, if it was a long-term play, gave me access to, say, a bigger company wanted to invest in my smallish company, but they gave me technology and marketing and branding and access to other markets, that might be a reason. Or if I needed the money to fund my growth in people and technology and branding, if I needed it for that, or to grow a temporary book, which is, of course, very cash intensive, because you pay your contractors before your clients have paid you. So the more contractors you have, the bigger your cash drain. So if you've got 100 contractors, each earning 1,000 a week, 1,000 a day, that's 5,000 a week times 100. That's your payroll is $500,000 a week, right? So that's going to make a dent even in your massive cash flow, right? So I would. Most of the businesses I've run have managed to fund it via our permanent placements, but sometimes you need to get an overdraft, which means the bank's going to have, a mortgage over your house, right, or something. People don't like that, understandably. So some people might take an investment to fund that growth. But just think of my pie analogy. You've got a pie, it's that big, you're giving a bit away, or you're selling a bit. Only do that if you think that's going to make the pie that big. Because if the pie is that big, the little bit you sold is insignificant. But if the pie stays the same, why did you do it?
Right. So if the entrepreneur is thinking about growing the pie, then you would say it makes total sense, and probably the time to do that is when you're ready to do acquisitions or whenever you need the money to sort of keep growing. Yeah.
Like if you, for example, were a person who built your business to 15 people and you saw a great opportunity to hire another 10, you wanted to invest in a new ATS, and there were other, and your contract business was growing, as an example, you might then, I would still advise people to try and find any other way not to use somebody else's money at the expense of your equity. Because just remember, if you are selling at a 6 times multiple and the business is making $3 million, 15% is millions. So just be careful to give it away, or not give it away, but sell it. There's got to be a good reason. And as I say, if it's strategic, if it allows for growth, if it brings in, one of those companies I was speaking about earlier, they offered 15% of their equity to me. I bought it, but they did that because they wanted me to stay involved in the business. They were in a different country and they wanted me not to say I'm tired of this. So they saw a reason, and it was worth it, and it paid off. Not because of me, but where the business achieved certain goals. So those sorts of things, if there's a strategic reason, it makes sense. If you're a good recruitment business, you should be generating enough cash to fund your own growth in most cases.
Yeah.
Unless you're going for some massive play, like we're going to open 8 offices across Asia, almost always that ends up in tears.
So this goes back to my first question as to why there's no strategic investors going after this industry. It's a combination of probably all of the reasons you just mentioned, where it's probably some entrepreneurs probably do think like you, like, well, I don't need the money, right? Whereas let me make this other point as well, where there's a lot of our clients, they invest in accounting companies, invest in legal companies, they invest in co-sec companies and payroll companies and all that. And they do that with 10 times multiple, sometimes even more. And those business owners could also think like you and could say, well, we don't need it. We've got enough money coming in and all this. But they do because they're thinking about the pie analogy, right? So is it just the fact that recruitment industry is just the way it is, and that's the reason why people don't go into it? If we became more open and became more ambitious, perhaps, then money should naturally start flowing in and it becomes almost an asset class.
I think you'd be surprised at how much money is invested in recruitment companies, notwithstanding everything I've said. Not in the small, recruitment industry, you could describe it as this. 80% have less than 15 staff. They're not looking for investment. The top tier, the biggest 20 recruitment companies in the world, all the names we know, Manpower, Adecco, Randstad. By the way, that company I mentioned, Finite IT, they sold their business to Randstad in Australia for 190 million. So there's a big company saying, we want to dominate IT recruitment in Australia. I presume that was their plan. So they've shelled out for it, and we'll see. We'll talk later about whether these acquisitions work. So you've got the smaller ones, and you've got the bigger ones. And most of them are listed. So people are making money, losing money, investing in them all the time. It's that middle group, right? It's that middle group. One of the companies I'm on the board of, in fact, I was a founder of, is People to People. So they're a $110 million turnover, 100 staff. What does that company do? Right? So there's many options. Let's really just grow, add staff and go to 250 people. We can fund that ourselves over 3 or 4 years. Let's go and buy another big business, but we'll need an investor to help us because we're going to need $40 million, $30 million. We couldn't buy Finite IT for $190 million, for example. But let's put them together, and then one and one will make 3, and then we'll list on the stock exchange, or some Japanese listed company that's trading in Tokyo at 25 times multiple will buy us at 10, because for them they double their money on day one. So those sorts of things are happening all the time. So all the time, I can tell you 10 Australian companies that were bought by Japanese companies in the last 5 years. They're all well known. People Bank, Chandler McLeod, I can't remember, you can look it up, it's public knowledge, 8, 9, 10 times multiples. It's completely wrong to think that there's not investing in recruitment companies. It's happening all the time. And as I said, private equity is constantly looking to roll, but they're looking for a shorter, they're not looking to invest for the long term. They want to take 3 or 4 businesses, combine their EBIT to go to 25 million, grow it another 5, and then present it for an IPO or a sale as a really big entity.
So the money is flowing into recruitment companies, but it's probably just the top 1% of large in terms of size.
Yeah,
and that's where it's all going. But still, I never hear them telling me that, well, we love recruitment companies and we put so much money. We don't hear that. Yeah. So that was my point earlier on.
I don't think it's a sexy thing that investment companies are thinking about, investors are thinking about. But going back many years, when we IPO'd Recruitment Solutions, we had to do a roadshow, right? So what that is me and one of the other owners and our broker who did the listing. I'm not sure that's the right investment bank or whatever you call. Yeah. He and I remember we walked up and down Collins Street in Melbourne and in Sydney, and we saw 15 fund managers in a day each. They only gave us 15 minutes, and we presented our business and said, this is our business. They all invested. Well, most of them invested. So when we listed, it was 80% owned by fund managers, right, and 20% owned by retail investors, including our staff. And it was oversubscribed, so a lot of people had their money sent back. But that pushed the share price up on day one. Now, this is an ancient thing, but I mean, people were investing in... A lot of the listed recruitment companies in Australia have not performed well, actually. And I think that is because the principals are seeing the listing as the end. Listing your recruitment company is the beginning. Because if people invest, they want you to triple their money. They don't want you to be looking at your exit. Yeah. So I think that's... You would only... some of my clients have said, should we list? And I've said, if that's your plan for an exit, rethink. It could be an exit, but it's going to be 5 or 10 years because you are going to be under the scrutiny. I mean, I was on the board of that public company, and you're under scrutiny, right? You're questioned every day about everything.
Yeah, look, so really interesting. I want to bring in your book here. So for the viewers, Greg Savage, The Savage Truth, amazing book. I read it. I wish I read this when I was going into recruitment, to be honest with you. You do talk about IPO in this book, and it's like, I don't think you're a big fan of it from the looks of it, and from the sounds of the book. It's not always as rosy as one thinks.
Look, our IPO, for a couple of things. I think we were very small to list.
Yeah.
And I think when you're a very small cap on the stock exchange, no matter how good you are, there's not a lot of interest, so I think that's the first thing. A company had listed before us, Morgan & Banks, which was a highly successful recruitment company, and Jeff Morgan lives down the road from me, and we had coffee. They listed their company at about $50 million in sales, and they got it up to $500 million. So investors made an absolute fortune. We didn't, after we grew, and the share price doubled, and so it was good. But we didn't effectively make acquisitions, because of course being public gives you access to money. And we didn't effectively make great acquisitions like they did, and they really grew. So I think that was one thing. I was still a relatively young guy, and I didn't really enjoy having gone from being an owner where you could make the decision like over a beer with your partner to going through a board of which the majority of people were non-executive. And it's the right thing to do. It protects the shareholders. But, and you go and have meetings with fund managers, and then they ask you why your margin went down 0.5%. And so, it was just, and some guy stops you in the street and says, I'm invested in your company. How come you're earning so much money? So it's irritating from that point of view. But that's just me. I think for the right company where they use an IPO as a mechanism to raise funds to grow and achieve their goals, it's a great idea. But it's a corporate, of course, it costs a lot. It costs $1.5 million to list.
Right.
So you've got to think hard about whether that is.
So, okay, what other exit opportunities are out there?
Well, one of the things I encourage owners of recruitment companies, and I know that's coming from a slightly different angle, is to think who would buy your company.
Yeah.
And the irony there is the bigger you are and the more money you make, the less buyers there are. People go, what? Well, of course. Let's take your company, 15 people, profit we don't know, we're certainly not going to say, but profit is manageable. There are 100 other recruitment companies in this city that could buy your business. But if you were making 20 million, there's probably 2 companies in this. You know what I mean? So the bigger you get, the more profit you are, the less buyers there are. And you've got to work out who is a likely buyer. Is it going to be a multinational who finds your niche attractive? Is it going to be one of your competitors who wants to take the big leap forward? Could you sell it to your staff? I've seen people do that successfully.
You did that as well in one of your
management
buyout, was it?
Yeah, at Firebrand, we did a management buyout of 10 offices of Aquint with their obvious support, and the staff ended up, and myself, with most of the equity, 70%, and Aquint kept 30% as a passive investment.
So that's a good way out.
So that's a good possibility, but that was only the beginning. We had to grow it, and we did, and we sold it in time. What we call in Australia the GFC, the 2009 thing came along and wasn't helpful. So you've got to work out who a potential buyer is. Will it be private equity? That is happening. Yeah. Would it be an IPO? So you've got to look at, there are many options that you could look at, depending on the size and what you've got to offer. So, for example, a company your size, it's never going to be bought by Randstad but they might buy Finite IT, which is $350 million in sales, and gives them a massive leap forward. But then Finite IT when they were looking at, I've got no knowledge at all, I'm not on the inside, but when they were looking to sell, they would have had only a very clearly defined group of possible buyers. Who can spend 190 million on a recruitment business? Well, there's probably 50 companies in the world that could do that.
Yeah, it won't be that many.
Not many. I don't know the number, but I mean, it's not. Whereas if you're making a profit of 3 million, there's thousands of potential buyers.
Look, you've probably seen a lot of stories. You've probably been on the street. You're very streetwise. You know how the deals play out at the end, and you've probably seen some really bad investments. I'm sure you've probably made some bad investments, but I mean, also you've probably seen other people make the mistakes as well. I think for the benefit of the viewers and everyone listening, let's talk about a deal that's gone south. Okay. What happened? Why did it happen? What can we learn from it? How do we stop ourselves from making that?
So to understand how let me first of all make a very sweeping statement that'll upset people. A lot of acquisitions of recruitment companies end in tears. I'd say most.
Okay.
that don't turn out the way people plan. And the reason is misalignment in the post-acquisition earn-out stage. Now, for people who don't know how it works in recruitment, you don't typically sell a recruitment company and sail off into the sunset. Typically, the owners have to stay for an earn-out period. And that earn-out period could be anything from 1, 2 to 3 or even more years, where they stay on, and their price is linked to the results in those few years. So now it gets very potentially adversarial because the interests of the two parties may not be aligned. So the buyer may have bought this business at a certain price and want to now invest to grow, but the seller wants to make sure that they hit their profit numbers. So they don't want to go and hire 50 people. No. And all these things need to be talked about beforehand. Let me give you some examples. Well, first of all, when I was at Aquent, we grew from 5 offices to 35 offices in 17 countries. Not my company. It's an American company, great people. I was the international CEO. I had a great 10 years there. And we grew this business, and we did it by organic growth, but I must have made at least 10 acquisitions. I would say half of them were huge mistakes by me. And I wouldn't make those mistakes again, although I probably have. And it's around the leadership. It's around the earnout. It's around brand. So here's some of the things that go wrong. First of all, if you buy a recruitment company that isn't sustainable, you can expect post-acquisition that your value is going to drop. So for example, I'll give you an example. I can't give you the name of the company because it's not a good story. An Australian company bought a business in the UK just prior to the GFC. It had 60 staff. It was all permanent recruitment. They paid a lot of money. 2 years later, they had 9 staff.
Oh dear.
So they lost millions, and it's taken them a decade to get back to where they were. So that's just a bad purchase. It's exuberance in a boom market, and you do see that starting to emerge. But buyers in recruitment are much smarter. They've been burned a few times. They're much smarter. But here's where the misalignment happens. First of all, brand is a huge issue. Right? Company A buys Company B. Company B believes that half their success is due to the name Company B. Company A comes in, and day 2, they change the brand to Company A. Company B is full of people in love with Company B, and they leave. So you need to be smart about, it's not that you can't change the brand, you just got to have a great strategy to do that. So that's something I learned. I made a mistake on. Secondly, alignment on very simple things like values and behaviors. People don't realize. So Company A comes in, and they're all suit and tie type dudes, and they buy Company B, which is jeans and t-shirt dudes. Well, what's it going to be like on day 1? Is Company A going to come in and say, take that t-shirt off and go and put a tie on? And they do things like that, and they destroy their value. Commission structures being changed immediately is another thing. My advice is to people and I've been involved in many transactions, so many conversations about transactions. People get excited. The buyer gets excited about acquiring this cool business, which is going to take them forward. The seller gets excited about, I'm exiting with all this money. And I say, what's going to happen to the brand? And the buyer will say, don't worry, we'll work that out afterwards. And I say, no. If I've got any power in the situation, I say, no. We need to have a plan. Let's agree that for a year it'll be untouched. And then for 2 years, whatever, there's a plan. So that's going to be one big thing. What's going to happen? The other thing that happens is Company A comes in and rationalizes the business because they're looking at it purely commercially. And we've got accountants, we've got marketing people. So day 1 of the new acquisition, they fire 12 people in the new company. And so these new people, these people who were happy about the acquisitions, look around, all their friends have just been fired. And that happens on day 1.
Right.
I know it sounds stupid, but that happens. And it immediately, it then goes back to, well, what have you bought? You've bought, you might have bought a temporary book, but you've actually bought the willingness and cooperation and motivation of a group of people. So why would you destroy that value? So those are some of the things that I call it misalignment, and there are plenty of others. Sometimes 3 or 4 of those things happen in the same week.
But yeah, it sounds really schoolboy, schoolgirl type mistakes, right? I mean, if you're buying a business, this comes out to leadership, right? And understanding people. Yeah. You're in the recruitment industry. It's all about people, and you make that mistake. You wouldn't do that if it was your own business. Yeah. But as soon as you're buying another business, you've seen these mistakes happen.
Yeah.
Right. And then so if you're saying all you have to do is just say, okay, your brand stays the way it is. We become a group, and then you're going to carry on, and you're going to run independently. So why integrate it in the first place? You should just leave it.
Well, I think
Standalone, but just have your shares in it.
it's more nuanced than that, because when say a big business buys another fairly big business, there is duplication of many roles, and it doesn't make sense to keep all those roles duplicated. When you've got, for example, say you're a big company that runs 1,000 contractors, and you buy another company with 500 contractors, and that company with 500 contractors has several payroll people and blah, 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 and you've got a team of 12 people doing that already. Over time, you'd want to consolidate it. It's going to save you $1 million, and it's just efficient over time. But it's not only that. Even if they don't do those obviously dramatic things wrong, when people have been with one company a long time and are aligned to that company, and they're typically very aligned to the ownership of that company, when they bought, they worry about things that may not even be there. I've seen this so many times. There is suspicion about the new company. What are they going to do? And even if the new company does everything to put them at their ease, rumors start quickly and morale can drop. It's difficult to do. But take brand, for example. Unless there's a good reason to have another brand. So for say you're an accounting recruiter and you buy another accounting recruiter. You really don't, in 5 years' time, want Smith's Accounting and Jim's Accounting. You want Smith's Accounting. So you do need to change the brand. It's how you do it. Over time, though, the people in Jim's Accounting, which is the small party, will want to become a part of the bigger brand. They just don't want it happening on day one.
Yeah.
Because they feel as though everything's changed. So it's communication, it's intelligent planning, it's bringing the right people on the journey. It's leadership. Yeah, you're right.
So do you think it's also to do with maybe, as you said earlier, the bigger firms buy the bigger firms, and because of that, everyone's egos are quite high. When you're in a listed company, it's all about quarterly growth. You want to talk about profit. Therefore, they do these kind of things. Whereas if it was a more of a long-term mindset CEO who understands people, understands the business, I thoroughly believe they wouldn't do it. Like, they shouldn't.
Well, they shouldn't. I mean, it's interesting. People have got...
Because it's logical, right? Yeah. I mean, you wouldn't do it.
Well, it's how you do it. It's interesting, though. People have very different... I've watched this over the years. So there are some big companies around the world. Yeah. And there are plenty of very big recruitment companies in Japan, like Recruit, which owns Indeed and owns a lot of recruitment companies, and others, names I can't even remember. In Australia, they bought these companies, and for the most part, they didn't change their brands. I did notice that recently... Chandler McLeod and People Bank, who were bought by the same company, they've rebranded RGF, which is the... This is all public knowledge. I'm not giving away anything that is confidential. So they have rebranded. But I do know other people who've been bought by Japanese companies, and they've gone through their earn-out, and they're still running them, and they're still running this. So they're happy with the brand. I've seen other companies, particularly UK companies, buy recruitment companies and change the brand on day one, and it's not gone well. So it's just about doing it intelligently with communication, misalignment after the purchase of expectation, even down to misalignment of what the owner's role is going to be and what their accountability is. So I buy your company. I own you, but I don't own you, I own your company. But you've been running your business and you're still running it for the next 2 years. And you want to hire 3 people. And I say, no. And you're like, I'm still the CEO. And I'm like, mate, I own your company. You're like, is this what it's going to be like? And so sometimes the awareness only happens after
the transition.
Yeah. And so I'm always saying, so what will the accountability be? Because your goal is to hit your profit number. My goal is to grow the business, or whatever my goal is. And they may not be aligned. So it all needs to be. So I guess I perhaps overemphasize what can go wrong. When you get it right, it's a beautiful thing. 1 and 1 can make 3. That's what I'm always saying.
Let's talk about that then as well, yeah?
Well, there's plenty of examples.
Yeah.
I'll give you a good example. Again, this is public knowledge to a degree, so I'll share Consult, that company I spoke of that we built. I did none of the work, but we built and then sold to a Japanese investment house. It's called Still, STILL. Great people. I'm chairman now on the board with the owners and the previous owners. It's worked really well. They helped us, funded us buying probably Auckland's biggest IT recruiter, or most successful, called Halo. This is all public knowledge.
Okay.
And it happened nearly 3 years ago. And that's been a brilliant, brilliant marriage. Okay, that wasn't easy because of different cultures, but both those companies have grown exponentially. We've cut out a lot of expense. We're moving slowly towards a merging of the brands, but it's 3 years and the 2 brands still exist. But everyone's happy now with we're going to go Consult over time. And careers have been enhanced. we cross-sold our accounting clients to our IT clients. Really, not easy, not without, you know.
So how did you do it? Yeah, what were the key turning points?
I think very open communication, delivery on all the promises, listening to people's concerns, and then in due time merging the management so that the people running the top level, the accounting business, were also running the others. So there was the same message coming through. Making sure that some of the second tier of the owners, the original two owners, have now moved on, which is all part of the plan. The second tier have all been promoted and nurtured, and their careers have taken off. And so it's been nicely handled. Not easy. There's some difficult conversations, and one or two people have left. But overall, a really good, and that is a one-on-one. The profit of the two businesses at the beginning is a fraction of the profit now. That's also the market's been good, but it's significant cross-selling. And
you talked about in your book as well about some lady in Victoria, people to people, was it?
Yeah, Erin Devlin.
That's the one, yeah. And then that was also two recruitment companies which you put together, right? I mean,
that's an interesting story, actually. And I'm still on the board, and I still work with her closely. At that stage, I was an owner of People to People. Sold my shares to one of the other owners who now owns it all. And we didn't have a Victorian office, Melbourne. And so a broker came to us and said, so there was somebody, I've got a very small company run by an impressive woman. It's called Devlin Alliance. Would you consider it to buy? So the board considered that, and we did like her, and we thought it was good. It was small, but we had a lot of other things at play at the moment, including the fact that I was selling my shares to the other people. It was all, and so we decided no. But I thought, geez, this is a missed opportunity. So I went to the MD of People to People and said, look, how about this? I put in a third of the money. You put in a third of the money. And Erin rolls her business into this new entity called People to People Victoria. She puts her business in there, and for that she gets a third of the business. I'll put the third of the money in, and I will manage her, so you don't have to be distracted. Not manage her, she's a very experienced person, but I will lead her. You give us the brand People to People, the infrastructure, the payroll, the marketing, etc. And in 3 years' time, I will sell my shares to you, and then you'll own it. It's not often in recruitment that a plan comes together. And so she did such a great job. I was helpful to her because she'd never run a business as big as she subsequently did. So I spent a lot of time helping her, but she didn't need a lot of help. But on key things I did. She built it to 15, 20 people. And then Mark, who'd put People to People, who put a third in, he put some money, and he'd put all those resources. He bought my third, so he now owned 66% or whatever it was. And she owns the rest, and now it's People to People. And still that entity exists. But from the outside, people don't really see it. It's just People to People. But actually, each state is a different entity. So that was a brilliant, brilliant plan where she brought her expertise, energy, and desire to grow a business. Mark brought his brand, infrastructure. I brought my experience of helping people succeed, and it all came together.
All came together. Wow, what a story.
And we all made money.
Yeah.
I mean, I made money. She now owns, she's now got 25 staff, so she owns third of a significant business. And Mark's got a very profitable Victorian office. So,
can I ask, what's the biggest return you've ever made on an investment?
So if you put 15,000 into recruitment solutions and then list it on the stock exchange, you could say it's a good return. But that was 10 years of work and blood and sweat and tears and risk. Yeah. So I don't know if you can include that. I think at People to People, I probably put 100,000 in, and I mean, I'm not an owner anymore, but it'd be worth 50 million now. So I sold my shares 5 years ago and nothing like that, but still much more. So I don't know. And there's also, I've also, made an acquisition of a business in India that we shouldn't have done. I made an acquisition, this is with Aquin. I bought our biggest competitor in Melbourne and handled that. Well, I thought I handled it well, but we didn't get the value out of that. There were reasons. There have been others. In London, for Aquin, we bought 2 or 3 businesses, and I think we frittered away quite a bit of the value. So it is possible to get excited about the idea of it, and not to think through how's it actually going to work on the ground after. And it's a facetious thing to say, but it's like a marriage, right? Yeah. Getting married is a hugely wonderful day, but the marriage, the wedding is not the difficult part. The marriage is the difficult part, and that's the same with buying a recruitment company. It's not the consummation; it's the afterwards.
Okay, look, there are a lot. There's an increasing number of recruitment firms in the market who raise debt or raise money from investors before they even start. So, and they say that we're going to do the big global thing. We've just come out of a global firm and we want to do it again, but we know exactly how to grow and scale a business to that level. So they go out, they hire about 50 people, 100 people. There's some who've done 200 people, 300 people in the space of 2 years or whatever. And they're doing it based upon the money that they've got from the investors. So they're definitely not profitable. But the rationale is that after a period of time, as you know, once you've got 200 sellers, you're going to start making that hockey stick moment and boom, you go for a listing. And then, as you said, some big guy will come in and buy you because you're big, right? What is your understanding of such fast growth companies and have you seen that play out?
Yeah, I've seen it play out almost always to total disaster.
Oh, okay.
Yeah. So I would love you to give me an example of that working. I've never seen it. May have done. I mean, there's a case in Australia very similar to what you describe. Again, it's public knowledge. A company called Future You. I'm not on the inside. I've got no, but you know, they did that, and they were publicising the fact they'd hired 100 people. Now, if you hire 100 these experienced recruiters, and they've done it in 3 months, so 100 people each earning 100,000 is $10 million. You've got to generate a lot of fees to start getting anywhere. That's just people, let alone everything else. And they had projections of 250, etc. The latest I heard is they've got 21 people.
Oh.
And they almost lost the money. So, my figures may be slightly wrong, but it's all publicised and out there. So I think it may have worked. I've never seen it work. I think, you know, it's the hockey stick. It's we're going to go big and we're going to lose a lot of money, but then suddenly it's going to take off.
Yeah.
The problem is, if it doesn't take off, you run out of money. And then what do you do then? Go back to your same investors and say, yeah, sorry about that. Can we have some more? So there are probably people who have done it, but I would prefer, I think, you know, when we started Recruitment Solutions, we went big. By that, I mean, we had 9 people on day one. That was big because you got 9 people. We were, you know, we had to finance paying 9 people with no revenue, et cetera, et cetera. But that gave us a running start, and the business grew fast. We had 5 offices in 3 or 4 years. Then the recession came, dropped back, then grew again. I think that is ambitious, but it worked. I don't know how you manage all that type of immediate infrastructure. Look, there might be people listening to this. I know companies have done that. I just haven't heard it, haven't seen it.
Okay. Before you came, I spoke to some of my mates working in recruitment and told them, well, Greg, I'm going to be interviewing Greg, and there were some questions that popped up, right? Some of them are very common in the minds of most recruiters, and I know we're sort of going off the topic of fundraising here, but I think it's important for everyone to understand if you are about to invest in a recruitment company and if you are about to sell or you're raising capital on behalf of another person, these things are important. For example, work from home or work from office, okay? There's this huge community of people that believe in working offsite, right? And then I've always been in a recruitment company. You work, everybody works together, we're a unit. What's your view on this thing? In the grand scheme of things, like you want to be big, you want to be profitable, which one works better?
There are a lot of people who, as you hinted, like to take sides on that, and it's almost become evangelical. They're like, it's like a religion. Work from home is the way, you idiot, you old dinosaur. And then there's the other group, working from office, you're all lazy in your pajamas, you don't do real work. The truth of the matter is, and this is the key, recruitment became more remote because of COVID. We had to, by law, we had to go home. And then it became more remote. And people we interviewed face-to-face, we interviewed on Zoom, and clients we stopped going to meet them. It's now still remote for many recruiters, not because of COVID, but because it suits them. And the future of any successful recruitment company, unless it's a totally automated one, and we can talk about AI in recruitment if you like later on, is becoming more engaged, not less engaged. Recruiters have to get closer to their customers. Now, I don't care if it's well, I do actually, but you can do that face-to-face in many cases, and you can also do it on video conference. But this is what's happened for many recruiters. An interview that used to be in your office for an hour became 30 minutes on a Zoom, then it became 15 minutes on a Zoom, and then it became 10 minutes on the telephone, and then it was, do we really need to interview these people? I'm going to wang their resume around town. That is what's happening, and that is the death knell of those companies.
Right.
So don't argue about work from home. Argue about engagement. And okay, if you want to go further, I do believe, and I'm advising, I'll give you an example, people to people. I'm an advisor. I said this to them, you've got to get more engaged. The wheel's going to turn. A lot of your recruiters are billing a lot, but they don't have any client-side skills. We've got half the people in this company have never met a client, ever. And you call them recruiters? So I scared them, and I said, let's get out in front of people. So they've developed, it's just a little story. I'll show you how easily it can be done. They developed a little document. Actually, they've been doing it for years. They launched their new people-to-people report, or whatever it's called. It's got some interesting data on salaries, work from home, etc. They set the day, and on the day, their consultants, they've got 100 of them, called. And between them, they arranged 2,000 client meetings that day.
Yeah, I remember.
So they didn't go and do them that day. But
I think I read one of your blogs.
Yeah, I wrote the blog. That's probably a hell of a lot more now. It also took 87 jobs that day. But that wasn't their goal.
Wow.
So now they're going out and visiting their customers, engaging as we are face-to-face. So you and I have never met until this day, right? We got pretty close on the video conference, but we're going to be much closer as a result of this day.
Yeah.
Because we've met in real life, and you're going to buy me lunch, and I'm going to eat a lot and drink all your...
Yeah.
I suppose we won't go anywhere where you can drink, unfortunately. I'm kidding. So it's about being... I do think you should get in. I think there's a lot of recruiters who have made the mistake of confusing convenience of remote work with lack of engagement. There is also the issue of how people learn in an environment where they don't have people around them. So there's some... So I'm not saying one or the other. I'm saying do what works in the market.
Which one would you invest in? Both companies, same profit, same revenue. One is fully remote. One is fully in the office.
I'm unlikely to invest in one that's fully remote, and still, unless I was convinced that they had the engagement piece right and the ability to bring and train new people on. If they can show me they can do that with working from home, I'd be fine with it. Because there's benefits, there's much lower costs, etc. So I'm not... I'm a pragmatist. One of the reasons I'm still, reasonably at the top of my game in recruitment, or I don't know, on the top, halfway towards the top, after 42 years, is you train yourself to bring the best from the past, but to be open-minded to the best of the now. And so I'm not a dinosaur who's going to say you got to work in the office. I prefer engaging with people, but that's just me. And I can see a lot of, in Sydney, we've got offices where people live 2 hours away. Why make that person come in every day when they are just going to be on the phone most of the day? So there's nuance and flexibility. But those who are evangelical about it's got to be this way or that way, they're foolish.
Yeah, okay.
Because, they talk about the new normal. It's a ludicrous thing to say. There's no such thing as new normal. There's only the now normal. Something new will come along, and it'll all be different. I mean, if we go into a massive recession, let's say that happens, and people can't get jobs. And if the CEO says, I'm going to offer you a job, you have to come into the office. They'll come into the effing office. And then what we're going to say, this is now the new normal? People are so in love with the now. They don't think about the fact that it's always evolution. World changes, circumstances change.
No, I'm totally with you. We do a 4-day week. We still work Fridays, but it's from home. But the 4 days we sort of all come into the office and have a good laugh and work hard and learn from each other. I think that's the way it should be. And I think a combination or something that gives flexibility, I think, is quite important.
It's true. It's difficult though. So I heard a very interesting story on this. There's a company, I forget the name of it. It's not a recruitment company. They have a rule that unless, because they've got flexible and hybrid. So sometimes they had meetings where 3 of us were in the room, like there are 3 of us in the room now, and 3 were on Zoom from home. If they have a meeting like that, everyone has to go and do Zoom. You might say, why wouldn't you got 3 in the room? They say no, because if you're in the room, you've got an advantage, which is true, right? Because I can see your body language. I might say something, I might say, right, we need to open an office in Peru, and I can see you going. No one else could see that. Right? Or we have a coffee break, and then I say to you, Ayaz, look, mate, I want your support on this, right?
Yeah.
So they say, no, you can't have half of you in the room. You've got to have everybody in the room or everybody on Zoom, which is very interesting because what they've recognized is it's not a level playing field. And I think it's not a level playing field. It's not a level playing field when you're interviewing someone, when you're taking a job from a client, very different. If I was going to sell a retainer to a client, I want to do it across the table.
Yeah.
And I will do it. But if you say you've got to do it on the phone, my chances go down about tenfold. Yeah. Even though I'm good at it, my chances go down. So you've got to think about What outcome you're trying to create.
Okay, another question for you. Who is the best recruiter you've ever worked with?
Best recruiter I've ever worked with is a guy called Graham Whelan.
Oh, that was in the book.
Yeah.
I think his photo's in there, right?
Oh, it could be. The photo's on my blog. I met him 40 years ago. He's retired now, but he was the best recruiter because...
Why?
Because
40 years ago.
he
Must be someone better than him by now. No?
Is there somebody better than Pele?
Yeah, I'll say there's Messi is, yeah.
And is there going to be somebody better than him next year? I don't know. Best recruiter is always subjective, right? But you asked me the question, and he's the best recruiter. He's got a lot of flaws in the sense that he never was very digital or built a brand, or that wasn't his era. But he had these things.
He's still around, or?
Yeah, he's retired. I still see him. He's 65.
He's on LinkedIn?
Yeah, I would imagine so. Definitely. Graham Whelan. He started Recruitment Solutions with me. He ended up working for Talent 2, I think it was called. We met in London in 1982. He's got incredible energy. He builds incredible relationships. He has got unbelievable memory for people's names. He always says what he's going to do. I'd go to lunch with him in Sydney, I'm not kidding, in the last 5 years, and we could hardly eat the lunch because everybody in the room he knew, and people would come up to him and say, Graham, and he'd go, Bob, and they'd have a conversation. Say, how's your wife, Mary? And I'd say, who's that? He said, oh, that's a guy I placed 12 years ago. He would remember.
You remember the names?
Yeah, everything. And it wasn't, he never had to make an effort. It was just in his DNA. It wouldn't even be possible for him to tell a lie in business. Always acted ethically. Always helped everybody the best he could, even if he couldn't place them.
Right.
Never took a shortcut. Was obviously good at the mechanics of the match and doing all that. But just the rapport he built up. And in the end, he was in accounting recruitment. He could probably walk into any boardroom in Sydney or Australia, and he would have placed half the people there.
Okay. Another question: who's the best entrepreneur you've ever worked with? You can say two, if it makes difficult. It easier for you.
You got to remember, it's like I'm on the board of 16 recruitment companies, so it's very hard for me. It'd be like you asking me who's my favourite child. It's Hannah, by the way. Sorry, boys. But they'll never see this. Yeah. No, look, a lot of great people I've worked with. A lot of people have done smart things. I prefer not to say, because it is literally a bit like your children, because I was joking about that. But they're different. Yeah. And they're all special in their own way, and you wouldn't want to nominate one.
Okay.
I wouldn't want to. And no one would know who they were anyway, so there's not much value in that one.
What about people you rate highly that you've come into contact with over the last 4 years?
Oh, there's a lot of great people that I've met in recruitment. Jeff Slade built a brilliant business. Jeff Morgan, Andrew Banks, longevity, built powerful businesses like the ones I've talked about. Mark Smith, who, when we started People to People, he was the junior partner, and then I sold my shares to him. I could tell you a good story about that. Yeah. So Mark Smith used to work for me at Recruitment Solutions. I hired him as a 23-year-old graduate, and he worked 10 years. And then years later, we set up People to People. I was an investor. Yeah. So people do invest in recruitment companies. Yeah. And him and two others, good friends of mine now, they built the business. And then after about 10 years, I sold my shares to him. And I was giving him a bit of a lecture, saying, look, Mark, you now own this business. It's a beauty. Don't fuck it up. Yeah. And he said, Greg, I'll tell you the truth. All I want to do is build this big business to be bigger than Recruitment Solutions. And I said to him, typical savage comment, well, good luck with that, mate. It's now about 3 times bigger than Recruitment Solutions. Yeah, so, he sometimes smiles at that. So he's done an extraordinary job. He brings a blend of hardcore sort of data and systems and processes, which he would have learned at Recruitment Solutions. But he brings an empathy, and he's very human. Yeah. He's very, his people are incredibly loyal because of the way he works with them. So he would have learned a lot from me, but I would have learned a lot from him. I probably couldn't do some of the things that he's done. So he's built a great business. There are plenty of others. I don't want to mention, that's a company that I started, so I can mention that. I don't want to mention any of my other clients particularly because it's a bit too close to home. But I'm just trying to think across businesses that have done well. The guys from Bayside in Australia have done a great job. They built a big business. There's a lot of people that I respect.
Okay.
In the UK, for example, there's a business called SSQ in legal recruitment. I think they've done well. I'm going to be there next week, and I'm going to go in and do some training for a client of mine called Fresh Minds. There's two guys who own that, who've done an outstanding job.
Great.
So there's a lot of people doing, and these are businesses that are typically between 40 and 100 people. They're in that category of, they've got over the valley of death, which is the 15 people, and they've got obviously second tier of management, multiple billers, infrastructure. It's hard to do, and as a result, those businesses, we started off talking about value. Those businesses are incredibly valuable. They'll sell for tens of millions of dollars and pounds.
Brilliant. So I admire you for your focus, right? You've always come across as somebody who's very driven, still after 40 years, still making money, still doing things. How do you stay focused for so long?
Well, look, I suppose in the early days, I'm a competitive person by nature. I suppose it's also true I've got a fear of failure. I can't admit that I can't do it, right? So I have to get it done. Now it's different, right? I have a luxury that I realize is one of the main benefits of success, for want of a better word. I only work with people I like in projects I believe in. So, and that's not true of most of working life. You often work with people you don't like, you work with clients, whatever. I don't. I only work with people I like and projects I believe in. Obviously, you're a bit dubious, but mostly. And therefore, it's not difficult to stay focused. And I get a lot of satisfaction of seeing people who were like me, trying to do what I was trying to do, and seeing where I can help. It's not like I'm the font of all knowledge. Most of these people are doing brilliant stuff already, but I can add that bit that they haven't seen before. And that's tremendously rewarding, to see them grow and achieve their exit or have more fun. So it's not difficult to stay focused on those sorts of things. I don't work as hard. I mean, on days that I work very hard, but I don't work every week of the year by a long chalk, So it's not the way it was. But yeah, it's not difficult because I still love it.
You love the game.
Yeah, I do.
It's brilliant. Last question then, all right? I guess really it's just trying to figure out what it is that biggest insecurities, right? What would be, you mentioned here like failure, right? But what are your biggest insecurities? Because no one's perfect, right?
No, that's for sure. Look, I think your question says fears and insecurities. Most of my fears are outside of recruitment, like I fear for anything bad happening to my family, like anyone else. But in terms of the business itself, I'll say the first thing, it sounds arrogant, and then the second thing that undermines what I say. It's very rare I'm in a room talking about recruitment that I feel as though I don't know as much as anyone in that room. It's not to say I know everything. Every single person will know things I don't know. But overall, I never feel out of my depth. Having said that, it is also true that I'm on my way to London. There's going to be 200 people in the room, owners and managers, that pay £200 to see me speak for 3 hours. And that morning, I will have no fear about my ability to give the speech, but I will have huge imposter syndrome over, have I got anything to say that these guys are going to value? So I'm very insecure. For a while, you have this kind of, these people have come to listen to me, what have I got? So that still happens. So as a result, what I do, I think, is, I touched on this before, I'm constantly trying to keep myself up to date.
Got it.
And I always have to work out, this advice I'm giving, is it still current? Like, if I just turned up and started pumping out stories from 1996 and 2001, I'm on the board of 16 recruitment companies, so I'm fortunate, I'm hearing and seeing what people are doing now. And I learn as much from my clients as I give to them. I shouldn't say that out loud, they might want me to reduce their fees. So that helps me allay my insecurity about, am I up to date? So that's constantly a fear.
Okay, well, time's caught up on us.
Okay, mate.
Listen, mate, thanks so much for coming down. Is there a question that I should have asked, that I didn't ask, that you would like to answer before we go?
No, I think you covered a lot of things. I would just encourage anyone who's looking to buy a recruitment business or invest in it, or anyone trying to build one for sale, to not get seduced by your own exuberance about the value of your business. If you go to the book or some of my podcasts, I've spoken at length about what a definition of a sustainable business is. Focus on those things, because a sustainable business, as I describe it, will have value to someone else to buy. It'll also be profitable in the good times, so you can just live the high life on that. And it'll be very resilient in the bad time, and that's what you want. You know, you can build to sell. You know, you can build to sell, and if the recession comes, your business will be worth nothing. You just want to make sure you can live through it and go again.
Okay, well, as usual, we'll leave your email address at the bottom. If somebody wants to contact, someone's interested to connect with Graham, please reach out to him. He's very welcoming. I did that many moons ago. He's a good guy, and he'll advise you. He'll tell you exactly what you need to do. Now, on that note, thank you very much for listening. Over and out.